Well, hello again, everybody. This is John Norris at Trading Perspectives. As always, we have our good friend Sam Clement. Sam, say hello.
John, how are you doing?
Sam, I'm doing fantastically. Here we are, Thanksgiving week. Tomorrow's going to be the big day, turkey and all that stuff. Here being Wednesday before Thanksgiving. And, we haven't heard too much about it yet. We've seen some of the displays go up, but I don't feel as though the country is in full holiday shopping mode yet. And it just begs the question, in what sort of shape is the U.S. consumer going to be here the last month out of the year? Last week, as you well know, Target came out with its earnings for its third quarter. And just caveat, we don't own Target. We don't make a market in it, all that stuff. With it's not a major position at Oakworth Capital Bank. I don't own it personally. Sam, I doubt you would own it personally. All that. So no dog in the hunt here. But Target announced last week, and it wasn't good. I mean, revenue miss and EPS miss, some warnings about the fourth quarter and all that stuff. Conversely, Walmart has been reporting pretty decent earnings, but are sort of putting some guidance out there. They're seeing some weakness on the lower end in terms of consumer expenditures. There are enough sort of warning sirens out there. I'm going to cut it short but say before I say red flags. Out there in terms of what the health of the U.S. consumer. However, what flags and omens there are or warnings generally would suggest that maybe we shouldn't expect too much out of the U.S. consumer this holiday shopping season.
Well, on top of that, we've seen some retail sales data that's weaker than it has been. Some as weak as you have to go back to 2018 levels to kind of see that. So we are seeing that, and again, we've talked. The inflation narrative is not new, and whether real wages are strong or not, we've talked about it since this has been a topic. Is inflation's kind of like the snowball, like it just kind of gets worse and worse, or the what finally breaks the camel's back. People have stretched and stretched and stretched. And we have seen that. We've seen it with we talked about it with the food industry.
Yeah.
Hey, you need to start actually offering us some value for us to be coming back. And so I think it's not as clear yet as it has been with the food industry, especially the fast food industry. But it seems like that's kind of happening with the retail, and coming up on the holiday season. It'll be interesting.
It'll be real interesting to see because I hear what you're saying. And inflation is like that snowball effect. Now, what I will notice is, personally, and I wrote about it last week or maybe the week before in Common Sense, our newsletter/blog, about a recent trip that I took to the Winn-Dixie on Montevallo Road here in Birmingham, Alabama. I went in there to buy mouthwash and toothpaste, and I walked out of there with a full buggy full of food. I'm old enough to call it a buggy. Maybe I should call it a shopping cart. There you have it. But I got a Butterball turkey, 99 cents per pound. Hormel Black Label bacon, $3.39 per package. Hillshire Farms turkey sausage, which I happen to like. Buy one, get one free. Just kind of goes on and on and on. For all intents and purposes, Sam, I had a $150 bill that I paid $90 for.
It's not bad.
That's not bad. I'm seeing more of this in terms of groceries. I am seeing a little bit more of it fast food restaurants. I'm seeing automobile manufacturers are starting to offer some very attractive financing. I saw 0% financing for one recently. And I always know when the consumer starts getting a little weak when I start seeing companies like Mercedes advertising, Porsche advertising, what have you, typically those higher ones that don't need to advertise. I'm starting to see a little bit of that. A lot of this is suggestive of a consumer that's not necessarily falling apart, but kind of bringing it in a little bit.
It's exhaustion almost.
It's exhaustion. And while all these things are going down in the BLS and people say, listen, the real wages are doing better than all that, it's those things that that are still part of the equation, which might take an outsized hit on certain people's balance sheets. You like your car insurance?
Yeah.
Have you seen what's happened with that recently? And that goes up. Financing costs are not necessarily part of the CPI equation. What's happened to my property taxes? The house has gone up and up and up in value due to this weird housing market, and as a result, I'm paying significantly more in property taxes. That doesn't really show up in the CPI narrative. So there are a lot of things that the U.S. consumer, they have to contend more. They still have to pay. That's not showing up in the CPI data. So I'm kind of taking a look at all of it, going, here we are, holiday shopping season, and I don't have children any longer, so I don't know what the new must-have toy or anything like that is, and I'm not aware of it, and I'm seeing enough weakness out there. I think this is not going to be a horrible holiday shopping season. It is just, I don't think, going to surprise to the upside.
Yeah, I completely agree, and I think that exhaustion may not be an economic term, but I think that's what people feel with just continued high prices. I was talking about this earlier with another coworker, how you can talk about real wages and tell us the economy is doing well, but inflation, it's hard to overcome seeing double the price that eggs or milk or what have you used to be. And so that kind of psychological impact is pretty significant, and I think that's something we're going to continue to see. We've talked about it. Hey, the savings rates come down for a couple of years, really since it ballooned during the COVID stimulus era, and people are stretching and stretching and stretching, but you can only stretch so far. And I don't think you're saying this either, that the end is near, where you're going to have to start selling things and no Christmas, all that stuff, but we're getting closer to the end, and I think the closer you are to the end of something, the more you try and make it last, the more you try and stretch it out, and that just means kind of maybe a lackluster kind of retail season.
And that's what I'm thinking is likely going to happen. You mentioned the savings rate falling. Currently, I believe they're estimating at 4.6%. It has been lower than that throughout history. I mean, I can go back to 2 and 3 numbers prior to 2008, but 4.6% is below the 30-year average, and certainly below the 50-year average, and what have you. And then when you take a look at just overall consumer credit in the U.S. economy, sort of that credit card, personal line of credit, all that stuff boats $5.1 trillion. Generally with an interest rate in excess of 20%. Mm-hmm. Then you add on mortgage or residential real estate debt, believe it or not, that's another $18 trillion. So you add those two up, and it's $23 trillion worth of consumer debt out there. At the same time, the savings rate is 4.6%. Mm-hmm. I can make a real coherent argument, Sam, that there's not a ton of fuel left in the tank for the U.S. consumer in aggregate. Those top decile homes, are you still going to have a very Merry Christmas? People will open up wonderful gifts from Smathers and Branson and others. And however, it's the sort of lower second quartile, third quartile, and fourth quartile. Again, I'm not saying coal in the stocking or anything like that, but there's not going to be really a huge improvement over what their children or what their loved ones had last year.
And what I think will be interesting to see, like I already said, we've seen it already with the food industry, the fast food industry. Hey, we're coming out with more deals. And, Black Friday has now become the Black Friday week thing. So we're starting to see them today, really, or really over the last couple days, probably starting Monday. But it's become this stretched out thing. I don't frankly look at deals that much for Black Friday week, but I'll be curious to see whether that trend that we've seen in the food industry, hey, here's some actual significant value, really is something that pulls consumers in for one more year. Like, hey, let's blow it out again. There's actually some good deals, and so I don't know if that's the case yet. I'd frankly rather look at it after the fact and see where the data comes in, but I think that's something. We're going to see these retailers that some of them maybe have struggled. You mentioned Target already. Hey, if they want solid numbers, it's probably going to be some better prices in some areas.
Well, I think you're right about that. I also think that a lot of retailers, and while inventory levels are much better than they were for some retailers and wholesalers, they're still higher than they would like. Although interest rates are coming down, they're still financing their inventories at much higher rates than they were several years ago. This is just a wonderful opportunity to empty out the shelves as much as possible. And if you want to empty out the shelves, the best way of doing it is to lower prices. And so I'm not going to sit there and tell you, hey, you're going to get a 75-inch television for $150. But I don't think you're going to see blowout prices, or maybe just huge price increases for a lot of things. And I really do think probably the week leading up into Christmas, if you can wait that long, if you're that person that can sit there and wait that long to do your Christmas shopping, I think we're probably going to see a lot of deals from some retailers that are kind of maybe freaking out a little bit that they saw a nice Black Friday weekend and then nothing for a couple of weeks, or relatively nothing, and then the deals are going to come out of the woodwork. And that's because, as we mentioned, the consumer isn't dead, but doesn't have a lot of fuel. And one last thing I think we should touch on when we're talking about holiday shopping and talking about the health of the U.S. consumer is the labor market. Because while the U.S. consumer is running low on fuel, as long as we're creating a bunch of new jobs, that kind of masks that a little bit. Because
it's hard to be too bad.
Yeah, it's hard to be too bad. We're not out there, at least I'm not out there saying that the labor markets are going to fall apart or anything close to it, but it is important to note that 4 out of the last 5 months, the private sector has created less than 100,000 net new payroll jobs, according to the establishment survey. When you take a look at the household survey, job growth has been relatively anemic all year long. So you kind of take a look at the labor market is a lot cooler than it was this time last year. So that fuel injection from new paychecks is not as strong as it was this time last year. So you're not getting a whole bunch of stimulus or tailwinds from a vibrant labor market. Labor market is just slower, not collapsing, but not great. And so it's just another kind of log to the fire that leads me to believe that if you're expecting to take a look at retailers and say what a great Christmas this is, some will have them, but a lot of them won't.
Yeah, I think a lot of it will be those weeks, like you mentioned, after the Black Friday and Cyber Monday sales. Once we get into that true, just these are the prices, this is what you need to buy for Christmas. Getting the data from those, I think we'll get a better glimpse of this and to whether this is a trend that's going to continue. I mean, because the savings rate is moving down, whether it's
trending down. I mean, it was up a little bit last month, but it's trending down.
Yes, the trend is definitely lower. So and that trend doesn't typically just reverse for no reason.
I mean, you would have to have some reason for it to reverse, such as, $5 trillion thrown at it by the Treasury, as we did in 2020.
Direct deposits from the federal government.
I mean, something like that, or a sudden explosion in what employers want to pay their employees. And with the softer labor markets, historically, that type of stuff hasn't happened. So you're right, 4.6%. Maybe it'll tick up another month, but the trend line is heading down.
Yeah.
Or, probably if we can stay in the mid fours, that'd be great. But historically, we'll go a little bit lower than that. And that's when you start getting to the levels where you're going, all right, we need to maybe take a couple quarters, sit back, let the U.S. consumer rebuild the balance sheet, to see the U.S. economy cool a little bit. See the unemployment rate tick up a little bit as more people enter in the workforce, try to make up for softer levels of income. And that's what we're probably staring, not just this holiday shopping season, but the first 2 quarters of next year before we get to the back half of next year. All those rate cuts will probably come into play and a lot of other things. Consumers going to be maybe savings rate back up over 5.5% by the middle of next year. And then all of a sudden we end 2025 with a little bit more steam in the engine or a little bit more wind in the sails. But that's kind of what the crystal ball is telling me.
Right.
That's the hope. That's what the crystal ball is telling me.
Yeah.
The tea leaves, the magic 8 ball, all that stuff is don't expect too much out of this holiday shopping season. I mean, that doesn't mean you're not going to get some good gifts. Just don't look for, hey, this is the best ever or what have you. Probably will not meet some rosy forecasts. Shouldn't be all doom and gloom, sort of like the first 2 quarters of next year. Just don't count on the U.S. consumer to kind of fuel the growth like we normally do. It's just going to be real sluggish. Back half of the year, much better.
No, that kind of begs the question: is that kind of a good thing that we're starting to hold retailers' feet to the fire a little bit? And obviously, it's not. If things are going so well that people don't care about the prices, you're not probably going to get too many great deals.
Well, when that happens, when people don't care about the prices, that'll let you know that the dollar is weakening in value and people don't care about it. Mm-hmm. When people all of a sudden start taking a look and go, man, I'm not spending money for that. Start actually caring and taking a look at the bill and what have you, that's when inflation starts going down. We're going to start seeing it. It's not going to collapse. Still some areas, hey, I've got 4 cars with car insurance. That hurt this year. Sucks. Won't tell you that. You got 2. I know that sucked for you. I've got 4.
Yeah.
That sort of type thing. But all that stuff at the store, televisions, groceries, all that stuff, anything just sort of right in the middle, not super high end. I don't see any pricing pressure there at all.
So it's kind of like any good has to come with a little weakness. I mean, we've seen it with that's the whole inflation thing. That's what the Fed has frankly tried to do, whether they've been successful or not, is, we have to slow things down a little bit.
Well,
we have to make borrowing a little tighter so that people can't. If you can borrow at 0, why would I care the price?
Yes.
Home price doesn't matter. I'm borrowing at 0%. Yeah. So you need this. That's the friction with all this is there's these pros and cons, and they're all two sides to the same coin.
I mean,
we need a little bit. We need some people to, be concerned maybe a little bit about where their budget's going, or I'm not as confident in my wage growth next year, and these kinds of things.
I think that's all. I think that's all present.
You don't want them to lose their job. You don't want them to get pay cuts. I mean, these kinds of things, but just enough hesitation to where you
cool things down
demand better value.
Well, one last thing, and then I believe we've gone on a little bit too long about this here today. You mentioned two sides of the same coin. You have to have some slow times in order to appreciate the good times. Mm-hmm. It's kind of like happiness and goodness. You have to have evil in order to know what good is. You have to have sadness to know what happiness is. That's very philosophical, but it's true. And in order to have rapid economic growth, you have to have some slowdown so people can repair their balance sheets, so they can build up their liquidity, so they can be in a position where they can continue to borrow. And that's just part of it. That's why they call it an economic cycle. And I think in terms of the U.S. consumer, we're probably closer to the end of this economic cycle than the beginning. That's the easiest statement I've ever made in my life. That doesn't mean it's going to collapse. It just means holiday shopping season might not be as merry as people would like.
And we've said that. I mean, that again, you kind of said it, that it's not the toughest bet to make. I mean, we've been in a period of by and large pretty strong economic growth, some pretty strong expansion, and I tend to agree with you. All
right. Well, guys, thank you all so much for listening. We always love to hear from you all. So if you have any comments or questions, please, by all means, let us know. You can always drop us a line at tradingperspectives@oakworth.com, or you can leave us a review on the podcast outlet of your choice. As always, if you're interested in reading more or hearing more of what we have to say or how we think, you can always send us an email to tradingperspectives@oakworth.com. I've already said that. Or you can go to oakworth.com, OAKWORTH.com. I don't know what's wrong with me here today. Take a look underneath the Thought Leadership tab and find access to all kinds of exciting information, including links to previous Trading Perspectives podcasts, links to previous editions of our blog/newsletter Common Sense, as well as our quarterly analysis and update magazine, Macro and Market, as well as nice pieces from our advisory services group headed up by Mac Frazier. They're all in there. So by all means, take a look and find it. All right, Sam. Can you end this a little bit better than I just tried to?
That's all I got, John.
That's all I've got today, too. Y'all take care.